Every month, entrepreneurs, your books, just like in a corporation, just like at major companies, your books should close. What do I mean by closing your books and reconciling your bank statements? That means that all the activity that occurred in one month should be documented, and the books closed by the 10th of the following month. That's the way it's done in corporations, and that's how your business should run as well. In doing the reconciliation for your business, it brings out and it tells you everything. It tells you how much revenue came in, how much of that revenue turned into profits, whether or not that's a good month or a bad month. And as you do bookkeeping consistently, and this is a question I get asked a lot, like, what is the benefits of bookkeeping? Okay, so after that, and I do my taxes, then what? Bookkeeping is not just about 1 year and just so your taxes can be well. Let's back up. You went into business to make money. Saving on your taxes is a benefit for your business. It is not the reason you're in business. So write-offs is not your goal. Profit is your goal. You want to make profit. Sometimes when you're making and make a profit, you do have to use write-offs so that you can reduce the amount of taxes you owe. But that is based on how much money you made during the year. You cannot make a good decision at tax time if you do not know what you made all year. So, when you don't do bookkeeping and you wait to the end of the year to do your taxes, you are making a decision in one moment that you're going to have to live with for 2 to 3 years. What I mean by that, anything you do in the next 2 to 3 years that requires underwriting, any loan, any line of credit, any working capital, all of those things will ask you for your tax return. If you have written off everything because you did not have bookkeeping all year, and you could not, because if you have bookkeeping during the year, you can anticipate how the year will end. You can decide whether or not how much you need to write off when your business is set up properly. I dropped a video in it about the 7 degrees of separation. And that means that you can make conscious and intentional decisions about how much to write off and how much not to write off. Those are the things that rich people do that poor people who do not look at their books all year don't do. And it's not rich or poor based on the amount of money. It's rich or poor based on the thought process of said money. Going back, so when you write off everything, the underwriters will say your business didn't make any money, so therefore I cannot loan you any. When that's really not the case. Your business made money, you just wrote off everything because you were not thinking about long term. Though those are those things and those types of decisions become the downfall of your business. And now you're trying to figure out how to get around a return that's going to carry for an entire year. But when you do bookkeeping monthly, when you do bookkeeping throughout the year, you can have those kind of discussions with your accountant, with your business coach, and then we can make profitable decisions that ensure the longevity of your business. I told you it's all connected. Your bookkeeping is connected to your taxes. Your taxes is connected to how profitable your business can be and how your business can qualify for working capital, which goes to the expansion of your business. And the more you expand, the more working capital you have, the more you're able to invest, the more risk you can take. The more risk you can take, calculated risk, of course, the more your business will make. And it just keeps going in a circle and in a cycle, and it goes on. And that's how a business goes from being in business 1 year to being a corporation that is that's long standing in the community. It's all connected. And it begins with something as simple as good books. Good books is good business. And you cannot have a thriving, long business without good books. It's been your girl, the Queen Bee. You need to call me.